Hey everybody, it's Mike from Orderflows. It's Saturday, September 24th, and I want to make this video to sort of follow up on some of my more recent videos dealing with size in the market and what's stopping volume and what volume means basically to strength of the market. And I'm going to look at some other markets today besides the equities. Some of these commodity markets, in my opinion, follow the order flow much better than markets like equities, where you have a lot of hot money coming into the market. You got a lot of retail traders, you got a lot of money that's just sort of coming into the market for no other reason than it needs a place to sit. Whereas when you're trading commodities, those are not cash settled contracts, they're physically delivered, and majority of the traders, the overwhelming majority of the traders there, are people that are trading it because they need it, right? They need to make something with it. They need to make cereal in the case of, grains, or copper. They need to make pipes. So the participants are using it, trading that market, for hedging purposes, for taking delivery, etc. So it tends, in my opinion, to follow supply and demand much better than some of these other markets that just have a lot of hot money coming in and out of the market. Hot money is money coming from all sorts of different sources for different reasons, as opposed to markets that are more concentrated by producers, by I can't think of the term now. I don't say consumers, but end users. That's the term I'm looking for. People buying it because they need it. Okay, and based off of actual supply and demand of that market, based on what they're manufacturing. So corn is a great market for trading. Sometimes it's a very boring market to look at because you don't get much price movements, but when it starts moving, to me it's like one of those sleeping giants, right? It's got plenty of volume, it's good enough to trade, but you just don't get that volatility. Traders don't see that type of volatility as they would in equities, right? I mean, people seem to be attracted more to the action of the markets rather than the actual market itself. But there are good moves to be had in the grains. And sort of to follow up from some of the more recent videos on where heavy volume is going to be, the high of the day, the low of the day is your immediate support and resistance level. There's a reason it's the high, it's the reason it's the low, right? You have your resistance at the high, you have your support at the low. So it's not uncommon to see the heaviest volumes of the day sort of being transacted down there at these lows. So you see, this is corn. This is on Friday the 23rd, right? As we're coming down, making new lows, there's decent volume. 300 traded on the bid, 300, 600. Getting down here, it's another. It was at 689. Here's 1,000 contracts. People say, "Oh my gosh, we traded 600, we got through it." Okay, but just because you have that heavy volume there, right? That's where you're expecting it to be, right? Don't get so excited that there's heavy volume here and the market's getting through it, right? The market is finding its balance, and sometimes it has to get through some size to get there. Where volume is going to be more relevant is if you start seeing heavy volume coming in around an area you had been trading around, an area that you've been rotating around, and maybe you're starting to leave that area. That's where I think you're going to get more value out of the volume, so to speak, that now you have fresh buyers coming in or fresh sellers coming in. Whereas these, some of these bids, they could have been sitting here for weeks or, days at least, because we're at the lows, we're at, daily lows, we're at, we're below the previous day's lows, etc. So you tend to have, volumes around those areas, because if you have a support level in the market, right, the end users, right, the people that want to buy it cheap, yeah, they'll be loving to buy it at the lows of the day or just below the low of the day in case we dip down below and then rally up. That's their best place that they can buy it. They don't want to be buying it as the market starts rallying. So if they could have some bids in there and they happen to get filled, then they're happy. So just because you see, these big volumes coming in down here at these lows, don't get, you're, oh my gosh, you got this big volume coming in here. That's where it's expected to be. So let me give you a good example. Okay, so we got down to our low of 669 and a half. Now, granted, these volumes, the 1066, Battle of Hastings, the 689, the 609, these are coming in at the lows. The rest of the volumes that you're seeing here, sort of the heavier volumes are in the hundreds, 154, 113, 179, 179. Here's a 200, here's a 300. But 267, and again 100, 100, 174, 200. So now you got to start looking and concentrating on, rather focusing on where the bigger volumes are coming in. Okay, so what's happened here? So our lows here, 844, 669 and a half. Let's make this chart a little bit easier to read. Now let's start looking at where the volumes are coming in. So the market started going up. We're trading in this range here, 673 down to 671. So basically a 2-cent range. But you're not really seeing any big volumes go through here. 112, 133 starts getting bid up here. 269 coming in here on the bid at 674. Now what's interesting about this is you have this stacked buying imbalance, and then it turns at bid here. So I got a big buyer coming in. They had about 500 contracts to buy here. Okay, so they swept it up from 673 and a half all the way up to 4 1/4, turned it bid. Did you get much follow through? A little bit, right? It got all the way up to 5 1/4, and then it came right back down to that. So you had this buying imbalance on the way up, then you got the selling imbalance sort of at the same level. Okay, so while I do like this price activity taking place here, the sweep, the big order coming through and turning it bid, I don't like the fact that it couldn't build on it in the next bar. It just went 2 ticks higher and then went sideways for the next 5 minutes and finally got down through it. But you know what? I know that at this area, right, even though this trade didn't pan out, again, you could have bought it in here at, even if you bought it up here at 5 1/4, you're going to get out of it at, 3 1/2, 3 1/4. So it's just, a 2-cent stop. Okay. You got to have stops in there, right? That is normally a very bullish activity. Didn't work out. But you start recognizing that it's not working out by going sideways on all this area in here. But if you didn't, you got stopped out, you lost a couple of cents, 2 cents. Then it just sort of hung around here again. And again, it's just hanging again around the 672 and a half area. It does trade up to 4 1/2, just sort of hanging around in here, hanging around, not really going anywhere. Now it starts to tick up here again. All right, you see the 133, that's some decent size, but it doesn't really go anywhere, right? But there's nothing really actionable in this order flow. Now, some traders will say, Mike, why should I bother in corn? There's nothing going on. It's basically 674 and a half bid offered at 3/4. Sometimes it goes down to 4 1/4 bid, 4 1/2 offer, like that. You can see that taking place for how many minutes? 3 straight minutes. It's boring. That's why traders aren't interested in this. But again, if you start watching, knowing what to look for, the bar that comes in like this is the payoff bar. Okay, you see buying imbalance, buying imbalance, buying imbalance. There was 310 on the offer here at 5 1/2. It got through that. It went and bid at 5 1/2, offered at 5 3/4. Didn't trade 5 3/4. Then just sort of came down here, and then finally started poking up, and then from 675 3/4, all the way up to the 679 area right in here. So that was a decent move up right there, but this was the sign, the volume going through. Now I liked this volume earlier when we were right in here. This was coming in at 4 1/4. Okay, now it's coming in just slightly higher at 5 1/2, so about 1.5 cents higher. But you finally get that move up. This is the move that you're looking for with the volume. Now, remember, volume is relative, right? So if you're trading a certain market, you got to understand what's heavy volume. 300 is strong volume at a price in the corn on a 1-minute chart. Now, let's move on to another market here real quick. Let's look at copper, because copper is an interesting market. Copper is a commodity used in construction, right? It's used in pipes for hot water, and it's got a lot of other uses in construction. But what I want to talk about here, again, this is a market. This is Friday coming. Copper is one of these markets. It's got the LME, the London Metal Exchange. is a very active market in copper. Obviously, the COMEX copper is a different contract, but when the LME market is open, you tend to get a pickup in volume in the COMEX copper. So you can trade COMEX, in the early morning. You can see here, this is 4 in the morning. It's got decent volumes going through, 400 contracts, 400, 500. You do get those small volume ones, the 110, 116, 346, but you're getting decent volumes, 400, 500 contracts. And you can see as we're coming down into making these new lows, there is volume down here. You can see there's 102 that traded here with the 34. It's 140, 109, 164, 82, 100. So that was about 300 contracts sitting down here at this level. So you're starting to get a concept of what heavier volume is in copper, right? Just by looking at this market and seeing, okay, well, here's a 50 up in here. These are trap traders up in here. That's why this is a red zone being drawn out. The dark red is telling me that it's these guys are stuck in the market. Right? They're trying to buy it, go long, but they're trapped. But anyway, 54 is a strong number. Okay, where's it coming? It's coming on the offer. So this market went up, going sideways, trading sideways. Buyers are coming in here, but I got a strong offer in the market, sort of keeping pressure on this market from going any higher. And it sells back off down towards the lows and eventually does make a slightly new low by a tick. And then again, it's just sort of rotating around 63. It's heavy volume, but again, that's at the low of the day. That's your support. And people say, how do you know that's your support? It's the low of the day. By definition, that's your support area. There's a reason why it's the low of the day, because someone's interested in trading it lower. So anyway, here's the market came right back down. It went from what is this? 334.25 all the way down to 333.20. Then you're seeing some heavy volumes transact down here. Because remember what I said, about 50 contracts is heavy volume on a 1 minute chart in copper, especially at this time of the day, 6, 7 in the morning. And you can see again some support coming in here, right? You see that's why this point of control is down here, because that's where the volume is transacting. Every time it comes down here, it trades about 50, 60 contracts, it rallies back up. Okay, people say, well, what about this 95 here? Okay, well, so there was a bid there, but it just got whacked, right? And it goes below that point of control. But really what was interesting is there's a couple of levels in here. You can see up in here, right, the 111. Okay, even though it's a green candle, we're still closing right on that point of control. Next two are lower. What was interesting, the 106 that came in here. So we went up, you had a strong seller up in here, you get another strong seller a little bit lower. Market does rally back up towards that level, then comes off, and then we rally back up. Where? Right to that previous point of control, right in here, right? You can see, right? Right here, right? It came right back up, then went back down. And later we rally back up. We get up to this 334.90 area. This time, look at this. Right, point of control right on top. You've got 40 contracts up there. 40, 26, 15. This bar's traded 183 contracts. You got 40, 66, 76, 81 contracts. Just under half the volume trading at these three prices. So I know there's some stopping volume. There's some heavy volume up there. Okay, market sells off of that. Then it comes back up, gets a couple, like what is that? About 6, 7 ticks lower, and then boom, you get the point of control right on the top of this bar. 53 contracts trade right there. Right, 1/4 of the volume of this bar trades right up here at this level. And what happens? Market sells off. Again, this is what I talked about, point of controls on the extreme. And the beauty of the Orderflows Trader software is I have it turned off right now because I'm trying to make this video for people that don't have the software on what to look for. But we have this function here, prominent point of controls. If you were to enable it, now the Orderflows software, when it highlights it, it makes it very easy to see, right? As traders, I like to think we're very visual people, especially nowadays. With social media, we're always scrolling through our phones, looking at Instagram, looking at Pinterest, Facebook even. we just look at the images or videos. In this case, we're looking at images. The mind processes images very quickly. So, having something there to highlight it to you, telling you, hey, you know what, you might want to short this, and you can immediately just scalp it, for how many ticks that you want to get out of it. All right, guys. Well, anyway, I'll end that video there for today. Be sure to subscribe to the channel if you haven't already. I realize some of these videos are, how to describe it, aren't as scripted. Some people, they like to write all these elaborate scripts on the market and stuff, but I just like to pull up the charts and discuss it. This isn't like trades that I took or anything like that. It's more for educational purposes, right? What I saw in the markets on this day, or maybe after the markets close, and I'm looking through some charts, just point out some things so that when you're trading, especially if you're using order flow, these are things you can look for. All right. So thanks, everyone. Have a great weekend. Bye-bye.